Hi guys, welcome back. In this video I will speak about divergences. Okay, I know you have already heard of it so many times, but I will try to give you something new as always. Okay, so first of all, like all indicators, okay, divergences are built on data from the past. Okay, so certainly they are not so reliable for the future. Okay, that's why they should not be taken as the only tool to trade, but only as a confirmation of a strategy or as a trigger for the entry, like sometimes I do. Okay, nevertheless, divergences are very useful and still represent a valid alternative among all indicators. Also because they are not a real indicator. Okay, they are a way to read the indicator. Okay, divergence can be applied to any indicator: RSI, stochastic, CCI. Okay. Well, so I don't want to bore you with things you can see for free on the internet, but I want to focus on highlighting common mistakes, okay, that many traders still make. Okay, we are not talking about strategy yet. Okay, also because divergences are not part of my strategy. Okay, however, I often use them just a confirmation before a possible trade, or as I told you before, as a trigger. Okay, so for example, in this case we are on GBP used, okay, for our time frame. Okay, and let me show you. Okay, this is divergence. Okay, so low lows on the price and high lows on the time frame. In this case, we have RSI. Okay, this is a very nice indicator you can find on TradingView, divergence indicator. Okay, it shows you the divergences, but please do not take this one as reality. I mean, make your divergences. Okay, make your drawings. Okay, use your mind. Okay, so higher lows on the indicator and lower lows on the price. Okay, that this is meaning that price will probably go up. Okay, let me show you a common mistake. Look, in this case, higher high on the price and higher low, lower high, sorry, on the indicator. Okay, yes, here the price make just a bearish movement, but then goes up. Okay, why? Because divergences are not perfect, as always. Okay, because you cannot take only divergence to have as the only confirmation of a trade. Divergences must be included in a set of lots of factors, lot of tools, a lot of confirmation. Which is the other confirmation? Just price action, the price action setup. Okay, like this one I already told you. Okay, here I'm pretty much sure that price will go up. Because why? Because there is this this pin bar, this price action, okay, signal after divergence. Okay, in this case, we cannot enter short because there is not a price action signal. Yes, maybe this one is not so strong. Okay, we need more. Let's move on. Here things changed. Why? Because there is this very strong, huge price action signal. Okay, so in this case I'm pretty much sure that later price will go down. Okay, okay, so which is the price signal here? This big candle. Okay, that is a bearish pin bar, or maybe this is a gravestone doji. Okay, this is an engulfing as well, maybe in a higher time frame. Okay, anyway, it's a very strong signal, very strong signal. Okay, followed by divergence. Okay, or rather that follows divergence. Okay, as you can see. Okay, so in this case, how we use divergences. First of all, divergence must be confirmed. Okay, as in this case, so we will not enter the trade here. We enter the trade. We enter the trade here. Okay, let me show you better. Okay, here on the breakout of this support. Okay, this is a structure. We already spoke about that. Okay, and if you don't, you will find all the lessons on the next videos. Okay, you can use divergences to go on lower time frames. Okay, so for example, in this case, if we find divergence of 4-hour time frame, we can use it to trade, for example, on the 15 minutes or 1 hour. Okay, so if this is a good this is the doji, okay, on the 4-hour time frame. So we have to wait for the breakout, okay, breakout, and then confirm, and then here we can go, okay, or here we can go, we can sell. We can use it for the impulse, okay. Here we will speak about impulse that are a very fundamental part of my strategy, okay. So divergences are a good way to read an indicator, okay, a good way to confirm a possible entry, okay. Last but not least, if divergences are in a structure zone, a structure area, okay, they will be so much more powerful, okay. Now I don't know if this will be on a zone, a structure, yes, okay, more or less, yes, look at this, okay. So this is a structure, we will speak about that here, okay. Look how many times prices reacting, okay, from this key zone, from this structure, okay. So here we have structure, here we have divergence, okay. So we are pretty much sure that from this point, only with the price action signal we can go short, okay. As always, I will give to you so many examples about that, so don't worry if something is not so much clear right by now.